Hi, I'm Andrew Berman from the Mortgage News Network, coming to you from the M&N Studios here in New York. You're watching a video press release, and with us today, we have the Chief Business Officer over at Home Point Financial, Phil Shoemaker. Phil, thank you for joining us.
Andrew, hey man, glad to be here. Good to see you again. Love the beard.
Dude, thanks. I appreciate it, man. You know, as I was telling you before, my wife and kids have asked for it. They've actually requested it, so I'm going to keep it in for a little bit. But so listen. But today we're not here to talk about my facial hair. We're here to talk about your new announcement about your Customer for Life program that you created, which is like just creates this a partnership with the mortgage brokers that you're signing on. It's I mean, to be frank, it's unheard of in the mortgage industry, an industry where, as you pointed out, we're focused on transaction. How can we have the biggest month from a volume and unit standpoint? Do you see this as a potential changing in tides in the overall industry, or is this something that you think is only going to be something that Home Point's going to be able to execute?
No, I hope so. I think what we're doing is unique, but I do think that there is a gap in the industry right now. In that, if you look at just how the industry has been structured financially, you have really originations and servicing operating in silos, right? And a lot of that has to do with just the fact that servicing, it takes a lot of capital to retain the servicing, and so there's only certain companies that are able to do that. But I think what needs to change and what we're looking to do and what our goal is to create more of a merger between the two, where if you look at the origination side, borrower only needs a loan every 5 to 7 years, right. And so an LO, just that sheer fact alone, they're really only focused on new customer acquisition. I mean, some LOs are good at it, but the reality is it's really hard to think about something that's going to occur 5 to 7 years out. And so, they're not really staying top of mind, and they don't have a real reason to interact with that consumer other than putting them on like the normal drip email campaigns and things like that, right?
Yeah.
But the reality is when that customer is ultimately ends up at a lender that's retaining that servicing, or it's sold to a company that buys servicing, that company, the servicer, has a huge built-in advantage, right? Because they have a reason to interact with that customer on an ongoing basis,
on a monthly basis.
Totally, exactly. They're collecting their payments. They're doing their escrow analysis every year, and so there's a real reason there to interact, and as such, it creates these normal or natural touch points where the consumer automatically is has a reason to think about that company, and as well as outside of, like, if you look at right now the gimmicks that I think have maybe created part of the problem in the industry, like this whole concept of like credit triggers and payoff, that's been going on now for a couple of years, where you got lenders that say, we'll send you back the credit triggers and the payoff triggers, but the problem is that's too late. When you see it, credit triggers occurred, a payoff trigger, it's way too late. And so the only thing that really I think is effective in my mind, if you look at the companies that are really, really good at customer retention, it's because they're successfully marrying the interactions they have with the consumer through the servicing function with their origination activity. Meaning, I'll give you the example. This is probably the best way to say it. Borrower calls in, right, to an originator, right, or to a servicer.
Yeah.
And they're asking a question. The servicer has data on that borrower that may say, look, this borrower actually would materially benefit from a new loan, refinance, right? And on the phone, live, real time with that borrower, they can say, hey, we see that you would benefit real time, for a refinance. That's very different than like blindly sending someone an email or blindly cold calling someone that hasn't reached out to you. They called you. You have a captive audience with that borrower and an opportunity to say, we can help you. Okay. And so the companies, the servicers that are really good at retention, use that as a technique to feed these borrowers back to their origination activity. So what we're trying to do at Home Point, which has not been done by a servicer, is focus on that interaction and say, look, we uniquely interact with that borrower in ways that will allow us to understand when they're really interested in a loan, not just trying to cold call them, send them a piece of email, hope they respond to it. They're really interested in a loan. And when we find that or we see that they express that interest, directing that borrower, getting that borrower back to the originator that they had the original relationship with. No one's been able to do that. And so that's what we're calling Customer for Life. we kicked this off now. It's going on, I guess, 4 weeks, somewhere around there. I think to date, we've actually connected, borrowers have called into our call center. We've seen that, they've either expressed interest directly saying, hey, I'd like to refi, or we've seen that they would benefit from a refi, and we've connected them back with the original broker or independent originator that has sent us the loan. And as a result of those, I think we've sent back 100 or so borrowers within the last 4 weeks. And we can already see that there's probably going to be about 40 to 50 or so fundings that will result, from that initial program there. And so you don't see that. You see servicers out there that are sending triggers back, and these things that have been proven to be highly ineffective, but nothing that's really creating connectivity between the servicing function and the original originator.
Yeah, and brokers, at best are ineffective at retaining. I think actually, you guys have done the numbers. Actually, brokers really don't do a good job of repeat business.
Yeah, they don't. They're really good, and it's not from lack of trying. I
think,
and there's some brokers that are good at it, but again, the reality is just this: they don't want scale matters, because we spend a lot of money on data and have an advantage just in understanding our customers and when they really would benefit. But again, we have a reason to interact with them, where brokers don't necessarily have that, so it's not from lack of trying, but what we've seen, we looked at the portion of our servicing portfolio that has paid off, that is associated with loans that came through the broker channel. And what we found is the number will ebb and flow, but it runs somewhere between 14 to maybe 20% of those loans will end up back with the original broker. And this means the loan paid off. Let's call it 14, 20% of the time, it was the broker that re-originated that loan. And these are loans that went, it wasn't, regardless if it come back to Home Point, they could have gone to any other lender. It's the effectiveness of the originator. Only 14 to 20% of the time they're getting it back. And if you compare that to these large, servicers that have these very effective consumer direct shops that advertise during, Super Bowl commercials and stuff like that, you'll probably know who they are. I mean, these are lenders that, are really good at this, and they're able to recapture somewhere in the range of, 65 to 75%. And that delta, if you think the value of that delta of really not only just originating or acquiring a new customer, but the lifetime value of that customer and retaining them, it's huge, right? Yeah. I mean, as a point in case, 100 borrowers just in 4 weeks are going to result in 40 to 50 loans that, that the brokers would not have necessarily had we not been able to create that marriage, with the servicing side.
Well, I mean, so it's, one of the things that it hits me is, you've said that the broker is really good on the purchase side of the business, and that you think actually brokers should be focusing on the purchase side. You have an organization that kind of is built to empower the broker to focus on the purchase side of the business, because that takes, as you said, empathy and patience, and that's what's needed for those purchase transactions. When it comes to a refinance, it's kind of just a numbers game. I mean, you don't need actually that same empathy. But if you are a broker and you're originating this loan, knowing actually that you're not just originating this loan, but you're acquiring a customer that is going to be a customer for life, a mutual customer for life. You're going to spend more time on that borrower. You could spend more money on acquiring that customer. Spend more money actually on your local community, investing into your community, making sure you've got a better name. And this is a win-win-win.
Yeah, because brokers out in the field, the physical distribution gives them a huge advantage on the purchase side, and their ability to connect with local markets, with referral sources like real estate agents, builders in that market, in a way that these large-scale consumer direct shops aren't typically able to do. And so that's why you typically see it's there hasn't been really a model out there, except for say that there's some large distributed retail type players that I think have become pretty effective at it, but there really isn't a model definitely for the broker that makes it effective for them to be able to focus their time on new customer acquisition, disproportionately spend more of their time on the purchase business, right? But then also marry that with the servicing side such that they maximize the value on the recapture side and the retention of the customers they're working so hard to get.
Fantastic. So basically, brokers are going to go from judging their success based on their monthly or annual volume or units to customer acquisition, because it's going to be like a equivalent of an annuity. It's going to continue to pay off because of the relationship with you.
I like that. It's an annuity. That's a good way to think about it. Exactly.
Yeah, fantastic. Listen, it's great to hear. Actually, you guys are doing it. I just said there's something that's interesting that I'll say actually that speaks to your character and the character of Home Point. When I asked actually about the industry, like I think a lot of people actually would say, well, we hope actually we're going to be the ones that do it, but it's you care about the entire industry. You care about actually the mortgage broker, and you've had a career actually that's been focused on the mortgage broker, and it's a great thing to hear. Phil, thank you so much for taking the time today to meet with us. We really appreciate it.
My pleasure. Enjoyed it, Andrew.
And I'm Andrew Berman from the Mortgage News Network. Thank you for watching.